everyone, this is Kathy Lean. We've got another very busy week ahead of us in the markets. And even though US markets are closed for Good Friday, it's a shortened trading week, there's a lot that could trigger volatility in the markets. I'm on vacation, fortunately for me, not so fortunately for you because we're not doing this live. However, I did want to share my thoughts because I think it's very important for you to learn, prepare, and plan for your trading week, especially with all of these big events ahead. Now, in general, there are four things to watch. Number one, we've got the U.S. retail sales report. Consumer spending is the backbone of the U.S. economy and will play a very important role in not only how the dollar behaves, but also how stocks and everything else moves. We have the European Central Bank rate decision and the Bank of Canada rate decision. We'll look at some of those economy tables that we normally show on Monday about how the economies have changed since the last central bank met. On top of all this, we still have to have our eye on tariff headlines. We know that China has hit the U.S. back in its latest move with extensive tariffs on U.S. goods. So the question is, how high is the bar going to go? And we know there's a bit of relief from the higher reciprocal tariffs for all the other countries, and there's basically a 90-day reprieve, which should bring a lot of relief to the markets. But with the world's two largest economies engaged in a very intensive trade war, no one is going to win in here. And I think that's why U.S. markets resumed their slide on Friday. It's why the U.S. dollar continued to sell off as investors globally and domestically bail out of U.S. assets. So watch the headlines to see if anything more comes out of that. I'm hoping that there isn't, simply because, the bar seems to be already been moved very high and the punishment on both ends seem to be very severe. But you never know. So keep an eye on the headlines. But in terms of data, there's a lot we can talk about. And let's go ahead and dive into it. So as I said, there are three major things to watch this week: the U.S. retail sales report, the European Central Bank meeting, and the Bank of Canada rate decision. We'll talk about retail sales after we go through the two rate decisions. Now, the ECB is actually expected to cut interest rates by 25 basis points. Now, if you look at this table with me, which I always invite you to do on our Monday live stream, I think many of you will agree with me that there have been more green than there is red. This table compares how the economy changed from the last time the central bank met. And as you can see, that there is quite a bit of improvement. And, based upon this table alone, the ECB should actually leave interest rates unchanged. And a lot of this improvement comes from the promise of these governments to provide fiscal support and stimulus in order to offset some of the tariff pain and volatility in the markets. So the confidence in the business activity, IFO, ZOO have all improved. However, there is a lot of volatility caused by the recent tariffs. There will be some, relief and a breath of, fresh air for the markets or for policymakers by the fact that Trump delayed the higher tariffs by 90 days. But the volatility in the markets and the damage has already been done. And so that is why the ECB is expected to preempt a negative impact slowdown in the euro area economy by cutting interest rates by 25 basis points in April. On top of that, inflationary pressures have already fallen, as you can see in the middle line where it says red, where German producer and consumer prices and Eurozone producer and consumer prices have declined. Also, labor market activity has weakened. I think there's a good chance that labor market activity could continue to weaken as businesses delay any type of hiring and major projects until they get some certainty in the tariffs. Now, I don't think it's a complete done deal because we did get a delay on the 90-day delay on the tariffs, but I still think that they're probably going to cut interest rates by 25 basis points and then suggest that they're in wait and see mode. And if they do, that could take some of the steam out of the euro rally. So that's one thing to be watching for. The Bank of Canada rate decision. Now, even though there's a lot more red than there's green, the market thinks that the Bank of Canada is going to leave interest rates unchanged. They cut interest rates at their last meeting in March, and they've been one of the most aggressive central banks in cutting interest rates because they were one of the first hit by the tariffs from Trump. Now, I think, the damage has been done. And I think a good part of the steel and aluminum tariffs and other things still remain in place for Canada. And I think that Canadian businesses have been hit quite hard, even though they were not part of the latest reciprocal tariff list. Now, taking a look at this, you can see that retail sales activity deteriorated, employment activity deteriorated, housing market activity deteriorated, the business activity deteriorated. The only thing that has improved is inflation. We've seen higher inflation on the consumer level and the core level. So from this perspective, I think the Bank of Canada will probably leave interest rates unchanged, but there is a small but realistic chance that they could cut interest rates again. And there's a small but realistic chance that Canada will fall into a recession as a result of these tariffs. But they've got Mark Carney as their leader, and he's got a lot of experience from the economy, from monetary policy, from he'll speak to Trump and handle different political leaders around the world. And so in many ways you can argue that they're in good hands. So hopefully they'll find a way out of this. So in a nutshell, the ECB is expected to cut interest rates. The Bank of Canada is expected to leave interest rates unchanged, but either central bank could do something that's a bit of a surprise to the market. Now, in terms of retail sales, I'm going to go to let me go to the calendar. And retail sales in the U.S. is due on Wednesday. This is the most important report. So retail sales is due on Wednesday, and I think it's important for you to realize that the market expects stronger consumer spending. And there's a good chance that could be stronger consumer spending, especially due to higher auto sales, basically consumers front-running the tariffs. And their front-running the tariffs is expected to lead to stronger consumer spending in the month of March. So these numbers may not be so bad. But, once again, I think a lot of Americans have cut back. So I wouldn't rule out a downside surprise. The U.S. dollar has been very weak, but a lot of front running of the tariffs could be boosting some of these numbers. Now, taking a look at all of the data that we are seeing this week, New Zealand services PMI, the manufacturing PMI was kind of weaker, so service sector PMI is probably going to be weaker as well. Chinese trade, the trade surplus is expected to shrink. Usually Chinese data is quite market moving, but difficult to handicap. On Monday, we don't have anything that's really all that significant. We have a bunch of Fed speak. That's always interesting to listen to, but I think that, everyone realizes that the Fed wants to see some evidence of a slowdown before really pushing forward with an interest rate cut, even though many people believe that a slowdown is ahead and that interest rate cut is inevitable. We'll also get the RBA meeting minutes, which is always interesting. On Tuesday, we have UK labor market numbers. And the UK labor market numbers are expected to show job growth or labor market conditions improving. And so labor market conditions are expected to improve in the UK. And if it does do that, it could receive a little bit of a boost. But of course, once again, it's not a complete done deal either. So we'll have to keep an eye on whether or not, that actually ends up lasting. We have the German zoo survey, the Eurozone zoo survey. Those numbers, look at this, 10.6 against 51.6 previous. So huge deterioration is expected in this. And if we get that deterioration, it would be very, very bad news, because that would reflect the uncertainty that businesses and investors have in the euro area as a whole, and also probably in the global economy. And I think that this could also take some of the steam out of the euro rally, especially as it comes ahead of the ECB rate decision. People will believe that maybe any deterioration in sentiment will lead the ECB to have a stronger reason to cut interest rates. We also have inflation numbers. According to the IVPMI reports, the inflation numbers weren't too bad. And so the uptick that we have in inflation could very well lead to higher CPI. Now, the market expects a little bit of a slowdown in CPI growth, but that is definitely something that everyone is watching for, the possibility of a hotter CPI report on that front. We'll have to see. And then we also have the Empire State Manufacturing Survey. The Empire State and Philly Fed surveys are important manufacturing surveys. Now, a little bit of improvement is expected, but we'll have to see whether we actually get that improvement. But Made in America is really the goal, and so we could see some benefit to manufacturing activity. Chinese GDP numbers, always very important. GDP, industrial production, retail sales, all very important for China. And most of these numbers are expected to be mixed. Retail sales expected to improve. GDP growth is expected to slow. Industrial production is expected to slow. Then we get inflation numbers from the UK. As I said, we have inflation numbers from a lot of countries this week. And we also get inflation numbers from the UK. And both manufacturing and services reported stronger prices. So we could get hotter CPI. We talked about retail sales already and how higher weekly wages and the possibility of pre-tariff buying could drive up demand and lead to stronger retail sales. Bank of Canada expected to leave interest rates unchanged. And then we get some more Fed speak, Powell speaking this week, important to listen to. Then Wednesday evening, we have the Australian labor market numbers. We did have a very weak number the previous month. So snapback is back as expected, especially with Australian PMI services and PMI manufacturing numbers improving. And then Thursday, we have the Philly Fed Index, which is also interesting, and that should be market moving. But before that, we have the ECB rate decision. As you can see here, market expects a 25 basis point rate cut from the ECB. So the ECB rate decision followed by the ECB press conference at 8:45 will be very, very important to listen to. And then Thursday night, we have Japanese inflation data, hotter inflation data expected from Japan. And then Friday's a holiday for most countries. So I think it should be very quiet, consolidated trade, but a lot of the volatility will be bunched up to the beginning of the week. Now let's take a look at some charts. This is Euro. Euro's been very, very strong, and it's rose to its strongest level, actually, since February of 2022. Which is really bad for me. I'm traveling in Europe right now, but it's very, very strong. There is a possibility of pullback. There's a little bit of a consolidation, possible reversal candle. It went all the way up near 115. So I think there's a possibility it could fall back to 112 and even 111 and still maintain its overall uptrend. I think the overall trend should remain higher, but there is scope for a pullback this week with Eurozone zoo survey as well as ECB rate decision. Dollar yen, the dollar has been under significant selling pressure. And if you look at the monthly chart, you can see support is basically coming in at 140 in dollar yen. But if we bounce, we could bounce up to 145 before moving lower once again. Dollar Swiss, similar story, but dollar Swiss is weaker than dollar yen. If we get a bounce, it's in such a strong downtrend. I think, is the lowest level we've seen dollar Swiss since 2011. Can you believe that? And so, it is primed for a little bit of a rebound. And if it does, the rebound should take it to about 83 cents, and then we'll see how it does afterwards. But downtrend very strong. Downtrend looks like it's remaining intact. Same story with dollar CAD. Very, very strong downtrend. And if we draw this fib here, we're below all of the major moving averages as of Friday's move. So the next level of support for dollar CAD should be 137.12. BOC is expected to leave rates unchanged. We'll have to see what they say. If they remain dovish, that could lead to a little bit of a rally in dollar CAD. But right now, this chart looks very, very negative. Pound dollar, it's rallying. Resistance up at 132, support at 129. We have a lot of UK data this week. It does look like it also wants to pull back a little, but it does look stronger than euro, in my opinion. Aussie dollar, on the other hand, looks much stronger than euro and dollar yen and things like that. But the move in Aussie, the verticalization, did take it up to 63 cents. There's got moving average there, 100-day SMA. We've got trend line resistance. If it breaks above 63.50, then we're headed up to 65 cents. Otherwise, if it rejects this level, then 62 cents and probably 61.30, this low here will be the next support. Last but certainly not least, we also have a nice rally in Kiwi dollar. Resistance up at 59 cents, support down at 57 cents. And there's not much Kiwi data this week, so it's really going to trade on the market's risk appetite and demand for US dollars. So hopefully this gives you a nice peek into what is expected to come this coming week. And I wish you all a great trading week. And I will be back with you the following week.